And it works really, really well because the dollar has been this hegemonic currency, but that's now under threat. And
Hey everyone, and welcome back to Finance Wolf. In this video, Yusko talks about Bitcoin and other cryptocurrencies. Yusko says that Saudi stocks are much more controversial right now than Bitcoin, but no one hates him for Bitcoin. To be fair, the price of Bitcoin used to be $1,500, but by September it had dropped to $1,886. Yusko replied that they were right. Yusko worked for 8 weeks and got $11,000, which made him think, there must be more to this. He kept working for a little while longer, and that's when he really went down the rabbit hole and realized that this was an operating system. Yusko talks about a lot of other things in this video, so please watch it all the way to the end, like it, share it, and subscribe to our channel Finance Wolf.
right, I mean, the history tells us that the 12 months following the halving are the hyperbolic move cycle. And that makes sense, right? Just logically, what does the halving do? Well, it cuts the supply of block rewards that pay the miners for securing the network. So if the miners' costs are relatively fixed and their revenue goes down, in theory, a whole bunch of them would go away unless the price were to move. I think it's one of the most ingenious parts of the code. And there's a lot of ingenious parts to the code. But the fact is, in every previous halving, basically what happens is the fair value of the network doubles. Now, there is one nuance this time. And, I don't know if you've been following it very closely, but, there's the whole development of ordinals a year plus ago. And now, as of the halving, there was this development of runes, basically meme coins, or the technology to do meme coins on Bitcoin. And, everybody's talking about it, and some people hate it and some people love it. The reality is, what it does is it generates a lot of transaction fees.
Yep.
And transaction fees also reward the miners. So I think this time, instead of the fair value today, Tim Peterson would tell you is somewhere in the low 50s. I'll even round down to be conservative to 50. Normally in a halving that goes to 100. But let's say this time it only goes to 80 because the transaction fee offset. That's made up math. But it sounds right. And then in a normal cycle, we go to 2.3x fair value because of the FOMO and all the momentum and the leverage. But I think leverage is lower this time. So
100. 200.
Do we get to 150? Yeah, I think we get
fair
to
value is 80 and we 2.5 exit. We get to 200.
Well, I think we double this time. So let's say 150, 160. And that would be by April, May of 25. Exactly. So by the end of this, now I think it all depends. I've been saying that this is going to be the best Thanksgiving ever. Right? No more, you're not welcome because you're a crypto person in the family. People are going to be like, oh, come on. It's going to be awesome. And people are going to celebrate the crypto people in the family this year. And so if that FOMO period is like the previous two, where from November to December, go up orders of magnitude. I mean, remember, we went from 10,000 to 20,000 in 8 weeks.
And very quick.
There are multiple factors in markets, and the biggest one really is supply and demand. Basic Econ 101. And we had a pretty significant demand shift. And it hasn't fully played out. In fact, it hasn't even come close to fully playing out. The math that always amazes me, I believe in the next 12 months-ish, so we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash. So the boomers have 30 odd trillion with these financial advisors. Not all of them Well, my UBS still hasn't said I can buy IBIT in my account, right? It's my money, my account. I can't buy it because they know what's good for me. Vanguard, same thing. So
Yeah.
there's going to be 300 billion, I believe, that's 1% of 30 trillion, that comes in to this space. Scott, that's actually more money than has ever converted to Bitcoin in 15 years.
Yeah.
That's a pretty amazing thing, because what people forget is that multiplier effect of the bid ask, right? I convert some fiat into Bitcoin, but then I don't want to sell it. So someone's got to bid a higher price to get me to sell. And so you get that multiplier. And I don't think the multiplier is whatever Bank of America says, 118. Yeah. When we were talking pennies or dollars or $10 or $20, the multiplier was really, really big. Today, I'm going to say the multiplier's probably more like 20-ish. So 300 billion would add 6 trillion of market cap.
Yeah, it's a 5.
And it works really, really well because the dollar has been this hegemonic currency, but that's now under threat. And under threat has a negative connotation. It's evolving. And the reality is the dollar has not been the global reserve currency for the entirety of the world's existence. It just hasn't. In fact, it's only been the hegemonic currency for a very short period of time, about 80 years. And okay, yes, all of us who are living right now, that's our life cycle. But the reality is history is replete with examples of other countries, Portugal, Spain, Netherlands, UK, having the upper hand, and they use the same process. Look, I think it's interesting. So if you lend money to people, individuals, it's a good business, right? The Medicis kind of invented it. They stole it from the Portuguese monks. And, the nice thing is you can influence people to pay you back if they don't pay back, right? But it's not really that profitable relative to if the person defaults, what do you get? You kind of get their stuff, and that stuff's not that valuable. So then you can lend to corporations. And if the corporation defaults, you can get the company. And some companies are actually worth a lot of money. Well, the Rothschild clan figured out, if we lend to governments, now we're talking. Because when the governments default, we get power. And power creates massive wealth. And so lending to governments has been how you control things for centuries. And, the fact is, if I want to send money to, I say, my mythical, mother-in-law in El Salvador, who happens to be here in Chapel Hill, she just came from Tulsa to visit, but if she were in...
The well-known trader Peter Brand just released an insightful study called Does History Repeat Itself? Make your case. Bitcoin is the best. In his most recent essay, the experienced trader discusses the idea of exponential decay, which says that Bitcoin's bull market cycles have slowly lost their speed over time. Brand says that Bitcoin has had 4 major bull cycles, and the current surge is the 5th. He also says that it's worrying that the momentum of each cycle has been decreasing, and the current cycle is expected to hit a peak of around $72,000. In recent trading, this number has already been hit. It is important to remember how big events have affected the Bitcoin price in the past. Brandt talks about the stark truth of exponential decay, which means that there is a 25% chance that BTC has already hit its peak in this case. Pete thinks the market will reach a high point and thinks that price retracements could cause a drop to around $30,000 per BTC, or even to the lows from 2021. Even though he knows these results would be bad, he is still speculating on them. He thinks that this kind of correction could be good in the long run and compares it to similar chart patterns seen in the gold market. Brand ends his analysis by reluctantly admitting that the data is very important. Even though he was skeptical at first, he has to agree with the conclusions that can be drawn from it. If this video helped you learn something, please like it and subscribe to our channel, Finance Wolf. See you in the next video.